Good evening, ladies and gentlemen. In this episode of Stocks to Buy, we're going to be talking about Disney, Hershey. There's some fascinating news around that chip challenge that completely tanked Hershey stock. We'll talk about the broader dividend community that's starting to wake back up here with a lot of growth investors starting to dive down into some of these dividend stocks. I also kind of want to break down the Canadian situation that's going to resemble probably what's going to be going on in the US with the interest rate side of it. But I have to roll back a little bit because we're going to start this episode off with this beautiful clip that highly resembles probably many Canadians.
Cause I have $30,000 in credit card debt. When they call, I tell them I can't pay it back yet. Credit card debt. Tomorrow I may buy myself a dining room set or this Boba Fett. Credit card debt.
Yeah, I wanted to bring that up because I kind of want to roll back a little bit and tell you this thing that it's the evolution of wealth before stocks, before real estate. I just really want to mention something because I think most people watching this have gone through something that I've gone through in a manner that's we've heard probably from the likes of Dave Ramsey, a lot of these, big investors out there. But I just want to fundamentally break this down in a very simple way for like a lot of new people, because I think after watching Caleb Hammer, I'm sure many of you watch his channel with a lot of these people, same like Dave Ramsey, these people that are just so financially illiterate. It makes you feel, you watch it as kind of like, it's like financial porn for people that just want to basically feel better about their financial situation, because my God, you don't think there are that many dumb people out there. But eventually, I think anybody that finds themselves on the path of prosperity, the path of building wealth, come to this crazy realization that they just don't want to be broke anymore, and they're so fed up with it, they're willing to do whatever it takes to kind of make those steps to get themselves sometime in their future in a financial sustainable place. And I just think it's absolutely hilarious because it's exactly what I went through. I was $23,000 in debt at the age of 19 years old, like every kid, that every millennial that got pushed off the cliff into crazy student loan debt. I used it to start a business, which was arguably even riskier, but hey, at least I turned it into a business that I operated for a decade. But God knows, like you have to just realize, like I did, that debt takes so long to pay back that once it's paid off, you end up kind of having that epiphany moment where you're so like tired of it. You're kind of like, how do I function in a manner where I can make money off perhaps other people's businesses? Is there an easier way to start businesses? And you end up going down that path of investing, right? Because when I had that weird epiphany where I'm like, what can I do to make my life different? My mother pointed me in the direction of the stock market. And that's when I had the real wake up call, because that's when you wake up to capitalism, baby. That's when you wake up and you look around and you realize you can make money off everything. That's when that lens like comes over your eyes. It's like just washes you out and you're like, holy crap, the hydro lines coming into my house, I can make money on that. I mean, literally everything from everything is a profitable business, because if I can't own it as a stock like Hydro One with the hydro, or maybe the telecom giants to pay my phone bills, I can affiliate all the products that are sitting on my desk. Pretty much the lights that I buy on Amazon, the soundproofing studio setup, all of that can become profitable in a way that it's kind of that epiphany, that wake up that hey, this is capitalism. That's the reality to the next steps to kind of building that wealth, right? Because again, it blows my mind that it's the little steps, right? When you look at something like TELUS, this is one of my favorite telecom giants, trading down miserably, 6.3% dividend. This thing's not going anywhere anytime soon, maybe a dividend cut in the future, but $10,000, $15,000 of risk of saved up capital would literally pay an entire phone bill in perpetuity for the rest of your life. I mean, if you're paying Rogers or Bell here in Canada, I mean, it almost seems ridiculous to just be paying them and not have some exposure to the companies, because they will in perpetuity pay your phone bill for the rest of your life with a measly $10,000 to $15,000 investment, presuming you're not one of those people that finance an effing phone. It's like my least favorite thing in the world is when people are like, how is your phone bill only $40 a month? Well, I own the phone. I'm not financing $1,000 iPhone, and damn, I would never own $1,000 iPhone if it wasn't for operating a business. I mean, I go buy used. I mean, that's how we operate. We always buy used stuff, man. We buy used phones. I mean, for the first time in my life when my business took off, I bought a MacBook and a new phone. It was the first time in my entire career where I pretty much owned new stuff because it was more operable for the business, right? Where it made sense as a capital write-off. But before you can get to that point, you wake up to this epiphany, you still need money. This is where you're like, damn, I need a job. And this is the reality that I sit in today, because it's not about just getting a job, because no one's going to start probably with super high income, but it's also about starting side hustles and doing other things, as mentioned, affiliate marketing, all this stuff that's laying around your house. You start realizing you can garage sale it Amazon. Like there's so much you can do with it, right? And that leads you into this perfect realm of corporate taxes, right? You start realizing that even if your corporation doesn't make money, half the stuff you're buying, if you say it's for a company, all of a sudden it's a write-off. You get some taxes back. There's a lot of savings. I've been working on this actually right now as I've been talking to accountants about how much of my condo I can write off for business expense. And yeah, it doesn't actually accumulate to too much, but with utilities, insurance, property taxes, the interest on your mortgage, you could probably write off. I could probably write off a good $3 to $4 grand. I mean, that stuff really starts to add up. These are like the weird stepping stones that you start to go through, right? But it's not just about starting a business. It's not just about getting a job, because that stuff will obviously take time, but it's realizing you have to save that money. Like the frugality side of it is so prevalent that I always come back to that, like the decade prison sentence that I mentioned far too many times, like where you need to be willing to sacrifice, in my opinion, a solid decade of your life before you get to that place. Because in 10 to 20 years, you can be a millionaire. But I figure if you just live as cheaply as humanly possible within means of comfortability to some extent. But I've watched a lot of YouTubers on here, guys that were living in like ghetto homes and they were finding cockroaches on their toothbrush. I mean, I lived between parents' base. I mean, the amount of ways I had to save money to get to the position I'm in now is that dedicated prison sentence. But you'll evolve in the job. You'll evolve in maybe starting a side hustle and taking advantage and learning corporate accounts and, setting up corporate investment account. All that stuff is the gradual stepping stone to true capitalism and building like that inevitable wake up one day, 10, 15 years from now, where you have $1 million in the bank, right? Or in investments or whatever, real estate, whatever your dream is. And that's when you start realizing that, boom, holy crap, I'm here. And it comes so much quicker than I think people are willing to admit. Because again, you watch these people on the, Caleb Hammer's channel and your jaw just hits the floor, because some of these people are getting in their mid 20s and 30s and they haven't even gone through this process yet. This is a process that schools need to teach. It blows my mind at how simple it really is. And just nobody is just willing to say, hey, if you want to actually own a Lambo or have some kind of dream in your life, you're going to have to do these steps unless your parents are wealthy, you're a trust fund baby. I mean, the vast majority of us are going to go through these steps, or we're going to have this epiphany wake up call if we ever want to have any financial success in our life. So putting that little note aside, which is what I'm pretty much made the title of this whole video about, I want to talk about the investment side of it, because my God, the conditions of the market are in this weird precarious place, and it is about to change. And it's going to change, I think, probably in the next 6 to 12 months. A lot of opportunity out there right now, but a lot of this has to do with the positioning of kind of just looking at what people are intrigued by in the markets, right? And savings accounts are bar none the exemplifier of what everyone's thinking about today. I mean, it's hitting literally 5. How far can we go back? When was the last time people actually cared about savings accounts? Never this much as they do now, by like leaps and bounds. I mean, it is extraordinary. And can you blame them? I mean, take a look at this cash ETF, right? I mean, you take a look at this, and we're talking about a yield on here. You see that in the top left. You're talking about 5.39% with pretty much no risk, because this entire ETF is just opening up like, basically promotive savings accounts. Let's see the holdings here real quick, because you're talking about National Bank, CIBC cash accounts, Scotia accounts. I mean, these are just basic bank. You can go to a bank right now with Scotia and they're offering like, I think 5.2% on the first 3 months. I mean, that's what this ETF does. They just go look for promotions and they just switch them out, and they pay a nice monthly dividend with no volatility to the stock price that I'm pretty sure is quite liquidable to pretty much any extent at this point, right? But putting that aside, when you take a look at the other trends, I feel like people are looking for a little bit more hope in the market, because if we remove this, what I find also very intriguing is penny stocks. Let me go back into the Zoom here, because you got to see that, some of these small caps are starting to have more attention. Let's go back to the 12-month here. I mean, you take a look over the last year, and penny stocks are starting to hit their year high, and it's actually starting to surpass the likes of dividend stocks and ETFs. ETFs and dividend stocks actually haven't really changed that much in the public opinion, but penny stocks, man, they got written off, and now they've actually come back quite a little bit in search interest. Tech stocks, I'm surprised, don't have really any. I guess no one just searches tech stocks. They probably search something like Amazon stock. Nobody actually searches for tech stocks, right? And sure enough, like Amazon stock is above all of these search trends, right? So I'm pointing these trends out because obviously cyclically, this is going to change a bit. I think penny stocks could have a real potential. We're starting to see a lot of growth in some small cap companies. I've got my little small set of them. We'll see if any of them actually pan out here. I'll do a video dedicated to that because Aduro had some really big announcements. The stock's flying a little bit. We got crypto going on there as well, where there's some more speculation. But I really want to talk about the broad sector of what we discussed this week with dividend stocks, because that's where a lot of the big investors like Financial Education, all the influencers seem to be, sniffing out as of late, right? And there's a couple that I want to talk about because they always sit on the back of my mind. But when you look at the heat map, it's no surprise that, it's mostly the lower half sectors that aren't as big in market cap, especially when you look at like consumer defensive. Outside of Walmart, Costco a little bit here, it's been quite abysmal for the vast majority of them. I mean, same with like a lot of the healthcare stocks, the drug and pharma. I mean, you're looking at Pfizer here just sitting at ridiculous lows, and we're not talking about huge gains out of Johnson & Johnson over the last year by any metric. Or I think this is, what do I have this set to? I think this is set for the last 6 months, so basically just since the beginning of the year. I mean, we take a look here. Again, its tech is up so damn much, it just kind of overcrowds pretty much every other sector, which again, we're talking about yields in these sectors because a lot of these lower end sectors are primarily just dividend stocks and they're paying fat chunks. I mean, look at Berkshire Hathaway here, up 19% over the last 6 months. A lot of financial stocks getting wrecked, Bank of America, Wells Fargo. It's just really fun. Starbucks is down 5% year to date. Like even McDonald's is only up 6%. Home Depot is doing pretty well by the looks of it, 14% return, but I think that's coming off its recent lows. There's just so many companies, and it's so different on the Canadian side of the border, right? I mean, you take a look at the Canadian stocks, and it's kind of just astounding that the financials are pretty much wrecked this year. Tech, obviously, in Canada is doing pretty good this year. Shopify, Constellation Software, but I mean, Constellation's at an all-time high. Shopify's got a ways to go before it ever gets back. Energy is primarily what seems to be driving a lot of the Canadian economy with CNQ. I mean, Suncor's up a little bit, but Canada has been quite abysmal in comparison to the U.S. tech giants because that's the largest sector the U.S. has. Our sectors are primarily just energy and banks, and they're not doing nearly it to the equivalent, right? So in the realm of dividends and what people are looking at, when it comes to like my list of dividend stocks, obviously I like the Canadian telecoms. Like there's a lot of Canadian bank. I mean, those are the Canadian big ones, but there's like the outliers that I've always had on a list, like Costco's on my list. I got things like Hershey on my list. And these are the kind of stocks that never really go down a whole lot. Cyclically, they've been like some of the best performing stocks of all time. They're conglomerates. They have crazy moats. They have monopolistic behaviors. And it's kind of what you want in a company, right? And Hershey's just one that's always kind of been at the top of my list for a long time. I wish I had some contribution room to my RSP just for the dividends coming out of this one, because Hershey basically owns every holiday. They have like licensing rights to distribute basically, I think, the chocolate eggs, the Cadbury eggs, which I love a lot. They own Reese's. Pretty much anytime Halloween comes around, when you buy those boxes with Kit Kats and stuff in them, they pretty much own every holiday at this point, from Christmas to Valentine's to, I don't know one holiday where they don't have pretty much the monopolistic candy that sits within it, with a few exceptions. I mean, Elon Musk has even called these guys, kind of a monopolistic based company nobody ever does anything about. But the reason I'm talking about this today is because, again, it is a rarity when these kind of stocks fall off, right? I mean, things trading down 24% in a very short period of time. Like, what triggered such an event when this company just posted earnings in one of these crazy recessionary environments where their net income was up 28%, diluted EPS was up 30%, net profit margins were up 22%. This company is crushing by quite a few different metrics right now, yet it is just falling off a cliff. I find it very fascinating because it's always news driven. And I'm sure many of you have seen this. I might do a dedicated video to this because a teen, unfortunately passed away attempting this Hershey owned companies, because Hershey owns everything, the one chip challenge at school, the products to be pulled from the shelves. This has been going super viral, across TikTok, and I've seen quite a few different videos on it. But yeah, this is kind of hilarious. Not hilarious for the person that passed away, but hilarious that somehow Disney, we're going to get to Disney in a second, that Hershey owns this. And the question is like, again, it's kind of annoying when you have to make these kind of moral decisions, because it's a very tragic event to have happen that's leading to the suppressed stock price. But it's kind of like that question of, how materially impacting is this going to have on Hershey? Because firstly, I didn't even know this Hershey owned this. I couldn't figure out why the stock was tanking until I did some extensively deep digging here. And these are the kind of power play setups. It's kind of like 3M is being contemplated right now because a lot of the people I think in the Army were using their soundproofing little earbud things that didn't actually work. Like these are the like really materially impacting from lawsuits costing billions of dollars to some extent. But the question is like, how serious is this for Hershey to the point where the stock's trading down? I mean, we're talking about billions of dollars wiped off their market cap, right? So these are the kind of plays I find a little bit more intriguing just because of the moats these companies have, perhaps over companies like a lot of people have been talking about as well, which we're going to get into Disney. But what's also intriguing here is the MJ markets. Sorry, I'm kind of scattered on this one, but the MJ markets, because they from a balance sheet perspective mostly look abysmal, right? But there's been so much hype around them with this proposed legalization going on in the US. And I just found it so kind of nostalgic that Canopy Growth Corp is going to be selling their HQ back to Hershey, which was the largest manufacturing facility of those MJ products before legalization here in Canada, right? That, started really the whole generation of everything being Canopy, which is just crazy that they sold it back for about $53 million. So Hershey having to come back here in Canada. I find it very intriguing that, they had a full circle on this. And I wonder what they sold this facility to, Canopy for back in the day. I wonder if they actually made any money on it or what the deal was. But I'm going to pivot a little bit, and then I'm going to get to some Q&As for you guys because there's a lot of topics going on here. But Disney stock is one that's been coming up a lot as of recent, and I gave you guys my opinion on, I think, the last live stream where I said I would not buy Disney stock. Being in the entertainment industry, you quickly realize how cyclical it really is. I mean, and especially there's so much data coming out with how many movies Disney's been jamming down people's throats. Like there was, I think from watch time hours in the last 2 years or something, Disney produced more watch hours than they have in like the last 5 years. And that's all because streaming and the competitive nature of it, right? So the nostalgia of going to these movies and watching them when they come out is gone because they've just been jamming so much Marvel, so much everything down people's throats. And I don't know. I just don't appreciate, these kind of companies that have to compete so much. It's like Squid Games with Netflix as mentioned, but there's a really good video that came out that I shared in our WhatsApp group, which if you want to join, Patreon link's always down in the description below. But we were kind of talking about Disney and they kind of break this down. A great video. It's called Film Theory. Disney is finally dead and here's why. And this guy did a fabulous job breaking down like the psychology and the crazy realm of competing for eyeballs today. And how many movies they posted that completely flopped when lower end movies that cost way less were able to take the blockbuster away, like Oppenheimer, right? And like Barbie, and they were way lower production, films. Whereas Disney's spending hundreds of millions of dollars basically on a film, and they're not seeing like real profitability to any extent. And they're trying to divvy up what they're going to post between streaming and what's going to hit the theaters. It's a very big mess for them, and I think it's only going to continue to get worse. I mean, obviously, there's a bit of a value play set up. I could see some opportunity in it, but I'm just from someone that's been in the entertainment industry, outside of gambling and like real big addictions. I mean, I have a hard time. I have a hard time with Disney here. I don't think they have a diversified moat either. They're selling off, I think, a bunch of their networks right now. I mean, you like Apple, right? Because Apple's in the streaming game, but they have such a diversified moat. They can handle any of the cyclicality of it. And, they don't mind funding it because it brings attention to their other products. It keeps them in the ecosystem. Disney doesn't have an ecosystem. I mean, they have the Disneyland and then products that they sell based off movie hype. And a lot of that's coming to an abysmal end right now. Not a definite end, but I mean, people don't care about Disney like they used to. It doesn't have the same nostalgia, I think, for a lot of people when they're reaming movies out. And Disney used to pay a dividend. I know, right? It's quite a vicious little cycle there. But I do want to finish up, and then we're going to do a quick Q&A session. We'll have a little bit of fun here. But when it comes to the banks cutting these rates, I think it's not cutting, but pausing rates, which I think is a defining factor that the U.S. is probably likely to pause at this point. And I think it's very intriguing because a lot of analysts are pointing out that there's a real potential that the bank could start cutting rates as early as the first quarter of 2024. And a lot of this is going to come into play with whether we are in a technical recession or not. I think the data is starting to present itself that, in the next quarter of GDP in Canada, because we had negative GDP for the last quarter, it's likely the next quarter could be negative and we could actually be sitting in a recession as we speak right now. It's very hard to gauge out if we're in a recession. I mean, things look great from one end and terrible from the next. And we'll talk about the terrible from the next because, I mean, I'm sure a lot of people I was actually looking up to do the comparables on like how much has rent actually gone up in Canada versus like New York, like Toronto versus New York. And I've come to realize that it's not just a Canadian problem. It seems like rent is exploding across many different places. So it's clearly a big part of the interest rates environment. It's a huge part of the inflationary pressures. But I just find these conversations so intriguing intriguing because, it's driving the media right now in Canada.
$2,000 a month, and my rent is $1,660.
Sadly, this is getting to be the story of pretty much everybody out there. I haven't rented since I was in my 20s, so I've been out of the housing market forever on this shit. But I tried to help my niece get a place about 6-8 months ago, something like that. And she was telling me everything she found was $1,900, $2,300. And I'm like, Jesus Christ, sweetheart, you just let me look for you. There's something out there, $500-$600 a month that's decent. I'll find it. There's not. Like, how? I mean, why did we get to this point? Why is just a decent place to sleep and cook and survive exist? Why is it $3,000, $4,000 a fucking month?
So this is actually a really easy thing to explain, and it kind of reminds me of my brother because he owns a duplex up in Cottage Country, which is way out of the city, way smaller population. His tenants moved out on their own will, and then he got new tenants, was able to jack the rent way up. But the day he listed, and this was only like not even a month ago, he listed the place for rent out in the middle of Cottage Country, and within one day, the dude had 40 different email applications to rent the place. And I think it's people vote with their feet, right? And that's the harsh reality of it, is that the supply and demand is so messed up because of immigration to a lot of major cities. And major cities only have so much supply. Actually, like when you look at I always found it so intriguing how much, these big celebrities pay to live comfortably in New York. And when I look at the idea of what they're living like, it is not what a millionaire or a super big celebrity looks like, the way they should be living. It's just, even like Barbara from like Shark Tank, like she's got a nice place in New York, but for the money that place costs, it kind of blows your mind because it looks more like normal living than it does like, high standard living. And unfortunately, because of the crazy supply and demand mix up here, which again has nothing to do with politics at all, other unless the government wants to cut off immigration and start, helping with some of the infrastructure. But I don't think government has as much control over the free market when it comes to real estate when people are voting so heavily with their feet. And there's just areas right now, which unfortunately is the large portion of Canada, because again, Canada has 1 million people in last year, which is nuts. But I think it's funny because it's becoming such a political debate. And I usually don't like getting into the political side of it. But if I had to make a bet right now, and I'm trying to find a way to bet on it, because I basically bet when Trudeau came into office and he was going to legalize MJ Market, and I knew he was going to legalize it. That's when I bet on things like Canopy. But when it comes to like now, like, and argue with, I don't care about his political rhetoric. I don't care about any of the parties. Pretty much agnostic to government politics, because I try and avoid them in all means when it comes to my personal life and financial future. But like, you can't help but recognize this Poilievre dude is really taking Canada by storm at this point. And it's kind of astounding because he's basically just saying what everyone's complaining about. Will he be able to fix it? Probably not. They never do. But
Mr. Trudeau, if you think life is tough for you, you should meet the carpenter I met at a Tim Hortons in the Sioux, who lives in a parking lot because he can't afford the rent. He wasn't angry either. But I was angry for him, because an economy where the people who build our homes cannot afford to live in them is fundamentally unjust and wrong.
So anyways, this guy basically just wants to start subsidizing all like the thousands of I think there's quite a few buildings he's going to take from the government and turn them into some low income housing. But there's no way to fix this problem. Like, he wants to loosen up some of the regulation, incentivize municipalities to start like clearing like construction, like all the stuff he wants to do doesn't materially actually do anything when there's still years ahead of us supply and demand problems. Like, that's not going to get fixed overnight, right? So this guy's really, intertwined himself into a lot of, I think, the lower income people, and that's what's probably going to win the vote, because a lot of people just feel incredibly broke, and I'm sure a lot of people are incredibly broke, and they're going to have a lot of hard decisions that they're going to be facing in the coming future. And unfortunately, I think that's a lot of millennials, right? Because we were the ones that were pushed off the cliff into getting crazy educations, doing everything we were told to do, and now you come out broke, credit card debt. All of a sudden, you just maybe getting out of debt to realize that everything's skyrocketing around you. You feel like you can't get ahead, right? So the amount of work involved to pull off, that whole beginning of the stream frugality aspect of it isn't going to be what it was over the last 10 years. So if you're watching this channel, I'm hoping most of you, like me, weren't nearly as ignorant through your 20s. You were very frugal financially, trying to save, put yourself in a position. And I still think it's a huge potential. There's more potential today. I'm not trying to demean anyone today either, that there's no opportunity out there. I was talking to my buddy at his computer store. It's a young kid that's working there. We were joking about his wage, not in a bad way, but because you're just trying to figure out how you can build up your wealth. And I was just explaining to him that you're in a moment here because he recognized that this computer store is relying on old people coming in. It's more of a foot brick and mortar store. So explaining to him social media could give him access to hundreds of thousands of people on TikTok, showed him all these examples of all these computer guys that just do very basic, fixes for people and interesting things. And, you're getting hundreds of thousands of views, which converts into dollars. If you get views, it equals money. There's lots of ways to convert that. Amazon affiliates, I explained to him all these little things you could do. And it's crazy that it's like, there's more opportunity now than ever, but it's also probably one of the hardest times to actually just control your personal finance and spending. But I hope people recognize that if you're younger too, there's still an incredible amount of opportunity to make money without going far and having the extra expenditures, obviously, of traveling and doing all that stuff if you want to live that kind of life. But let's get into some of the Q&As here, of course, and see what you guys are saying. It will take at least a decade. And soon as we are getting close, we will go back to the same BS in the 2040s. Yes, I do agree. I think, we're not getting it from kids, right? My old business guy that I worked with, very intriguing. He would always go off about, the problem that when we get older, that there's going to be this is something China's facing right now with their older population, is that there's no young people to replace them. And you end up getting this out of whack system where everyone going into retirement, there's not enough young people to replace them in jobs and support and, economic value and taxation and just money generation for the entire, country. And it's very intriguing when you look at it, because people aren't having kids like they used to, right? I mean, most people aren't having kids in their 30s at this point, and we're only growing by immigration. We're not growing by, having kids. So it's a weird fact that we're going to probably face at the end of our lives. And I think China's going to be the first exemplifier of how they manage that, which probably robotics, if anything. I mean, robotics, I think, is the only thing that's going to really fix that issue, which the future is going to be so dystopian technologically. I think you imagine your parents growing up watching the first moon landing and all this different stuff. And now all of a sudden, when we get older, it's going to be so dystopian in comparison, I think, in ways that are going to be fairly profound in the next 40 years. No wonder the majority of conservatives are boomers. Yeah, more than likely. It's crazy the difference between living with your parents and not caring about bills or anything versus living on your own and realizing the hardships of inflation, housing. Yeah. So I think this is an interesting topic, right? Because a lot of people were making fun of me, and when I was doing these streams back in the day and saying, "Oh, I live with my parents, almost 30, whatever," and they were always pointing out, they're like, "Oh, you don't understand. I'm like, I don't think you realize we're living like this because we understand, right? And we're putting ourselves in a position so when we move out, these aren't the biggest concerns of our life, and we've done that pretty successfully at this point, and I'm proud of it. It's just weird looking at it because you almost feel ignorant to how much people are struggling. Because again, we just bought a condo. We have so much extra money left over. We're looking to put another $30,000 toward the mortgage probably this week. And we only just started the mortgage a month ago just to continue to reduce the costs. But it's just interesting because I never took advantage of my parents. Because I helped them pay the bills. I paid for internet, some of the utilities. I would do anything they asked for. When we go out, I'd try and pay for dinner. Obviously, I was trying to support the household to some extent. I wasn't just completely nursing off my parents by any metric. But I think our parents recognized the reality that we were facing, and they understood. And now my mom's because my mom's saying a lot of my family's oh, he's lucky. He's lucky that he can buy a place. My mom's no, but he made the decisions and put himself in the position to. It's not I would say it's luck. The guy worked for 8 years to put himself in this position, right? So I think, yeah, I think because again, we recognize inflation, we see what our 5.8% interest rate is on this stuff, but it's affordable for us, right? We made it affordable. So I think, I don't know, it's weird. It's a weird place for me right now. I like PP. I don't think he will save the housing crisis. Pierre Poilievre, he will not spend like a madman and balance the budget. The only thing I want Poilievre to do is cut carbon tax. I think carbon tax is one of the stupidest things to do in a tougher market environment where we're probably in a recession, where you're literally raising inflation, which forces the Canadian bank to raise interest rates, because it's just so dumb. Why not even pause it? Why not extend it and say, hey, these are extreme times. We know if we raise gas, food goes up, housing goes up, heating goes up, everything goes up when gas goes up. So let's just pause it, because they raised it through the summer. And it just made no obliterate sense. Because when gas was still going down, guess what? It stayed flat in Canada for quite some time. I mean, we didn't really see the big downturn that the U.S. got to see just because the carbon tax thing came in June or July or something. So annoying in that aspect of it. The problem is an hour and a half away from Manhattan, you can buy a nice place for a decent price. All throughout Ontario, it's becoming near impossible without paying with blood money. Yeah, I mean, it's hard to pay anything under $500,000 within probably, I'm going to say, about an hour and a half of Toronto in any direction. But there are still some more affordable places. My buddy owns a condo and he's looking to sell it, and perhaps his fiance probably coming up, I think, from the States, and he's looking to buy somewhere. It's like halfway to Niagara Falls, like it's in between there, and it's nice because they just built out the train track there, so there's station option abilities. Like there are some pockets out there that are a bit more affordable. But yeah, I think the general price for a house across the states, across most of Canada at this point, unless you're living in really remote areas, Newfoundland, maybe Alberta, where you're going to find places for under $500,000. If you want to live near the metro areas, you're going to be paying. I mean, our condo is too expensive for most people, I'm sure. I mean, I told my my fiance's cousin that lives in Edmonton, where we initially wanted to move to, and when we told him what we paid for this place, his jaw hit the floor, because I think he bought a crazy house for like under $500,000, like a full house upstairs, fully furnished basement, all that stuff. I think he's a movie theater in the basement. Hey, we're not going to have those luxuries, but we're close to family, and I'd pay to be close to family. So immigration, money laundering, monetary policy. So the money laundering is a big one for me because of the amount of effort our mortgage money laundering is bad, because when we got our mortgage, the hoops and hurdles we had to jump through to prove where the money was coming. Basically, every single dollar that hit that down payment, they had to know where it was coming from. And it was such an ordeal and a headache, because I was pulling from a corporation, a TFSA, fiance's pulling from multiple different accounts from multiple different banks. And they wanted to know exactly where every single cent's coming from. And it's kind of intriguing because you can see there were some weird, interesting loopholes I found in it, because they said if we wanted to make it more convenient, we could just say we're pulling it from a line of credit and just use one of your parents' line of credit. You don't have to pull from it. They don't care when the money ends up to the lawyer. But you see some of the holes and flaws in how they act. But money laundering is the whole reason that I don't think the economy is going to crash. I think a lot of people look at the debt to savings ratio and stuff, and Canada is like one of the most indebted nations, but that's for people that live here, right? Like Canada is completely based on foreigners, and those foreigners have wealth outside of this country supporting them here to some extent. Because I mean, I used to perform when I was a full-time magician at these schools where there was diplomat kids going to from like Brazil and like all these different countries. They're coming to Canada because Canada is so globally recognized for its education system. And these kids came from like the utmost wealthiest parents across the globe. And, you know, when their kids grow up here, they go to school here, they're like, hey, you know, we're going to buy a condo here. We're going to do something like that. That money that's coming from somewhere else doesn't, I think, get fully recognized in like the debt to assets of Canadians. So that's another one of those reasons I just don't think you can take all these numbers you see accurately, because Canada is so skewed that way. You know, if it prints so much money, yeah, hopefully not. We don't need to become, you know, some of those African countries once upon a time. You know, even Cardi B tweet out months ago about how it's expensive. It is. That's like, because again, that's like me saying it's expensive, right? Like I feel ignorant when I'm like, oh, life is so hard. It's so expensive for us. It's like, there's some like meme about like these white people that are like privileged, and they're like, and all they ever talk about is like, oh my God, I paid so much for this place. And it just seems to be like, you know, saying all these celebrities, like for these people to be complaining is so ignorant to the fact of like probably what people are facing, right? It's kind of like the Oprah Winfrey and The Rock when they were doing the whole fundraising deal for Maui, right? Like that's just a huge thing right now because of like they're the richest people alive. You know, asking people for God, like the amount of money they raised was a joke. I mean, in reality, I think The Rock's up to almost $1 million. They each donated $5 million, but honestly, you know, they could have each doubled up their investments. And they said, you know, forget it. We're just going to do this. We don't need your support right now. The economy's too messed up. I talked to a person that is leaving Saskatchewan, which is paying $900 a month to move to BC, that he will be paying $2,100 a month. And the reason hates the 5-month winter. Yeah, I don't know if it's any better in BC. I imagine Saskatchewan's probably a lot colder, but is it that much more? Is that what rent's up to now? Because when I last looked at rent in Edmonton, I know a lot of people prefer Calgary. We just like Edmonton a bit more. It's a bit quieter. We got family there. But nonetheless, Edmonton, I think the prices were still fairly reasonable. Like you can get between like 12 and maybe 1,900 a decent 2-bed, 2-bath. I'm probably wrong now. Inflation's probably destroyed that, because I've seen videos in Calgary where people lined up down the road to look at like rental places. Stocks are so boring right now. I don't ever sell. I only buy what my ADHD brain reminisces on the 2020 market. That's good though, man. Boring is good in investing. That's the whole point, right? Like ETFs. I mean, at the end of the day, investing should be cyclically boring because anytime it's been exciting, most people have lost money. I think if anything from 2020 and 2021 taught us, that's the defining factor. Unless you're trading, playing trends. I mean, that's the real way of investing today. I think is trend investing. Follow the stupid racetrack of sheep. It's honestly every trend lasts for like 6 months. I mean, you look at Nvidia, you look at the AI trend. That's a bubble. That is a defined bubble at this point. I mean, there's so many AI stocks that have just pumped too hard that are just overhyped for no reason. Those things, they're correcting now, and I wouldn't be surprised if they correct a lot more. I mean, look at like the MJ stocks. Like they're pumping right now. Like but I don't think that's a long enough trend. You really just need to find something that sticks with the influencer base. Like, and it was so basic to watch like a lot of these AI stocks, and you just look at it and say, hey, I'm going to buy it. I'm going to hold it for like 15 to 30 days. The trend's only been 2 months in. Let's see what happens. But you really need to feel it out and get a good feel for the market. That's like the Polyev thing, right? Like there's just things that with certainty are going to happen to a higher, like it's gambling. At the end of the day, it's gambling. But you want that gambling statistic to be in your end of the line, not the casino's end. So, how do you do that? What do you know? What do you think you know about the market? And just play that if you want to just have some speculative money, right? Because that's essentially how I probably made most of my money, was just playing trends that I think I thought to myself, these are good long-term investments. But when they shot up 500 to 1,000%, my mind was like, these are no longer good long-term investments. So I'm going to scale them down. I'm not going to risk 30 to 50 grand of cap gains on, where this goes in the next 6 months. So, I mean, it's interesting, right? To me, that's like the Polyev thing. Like politically, I mean, sometimes if you can bet on that stuff, like bet on it. I'm like, I'm trying to figure out how I can bet on this next Canadian election, because I've never seen Trudeau so hated in his life. And again, I got nothing against either of these guys. It's just apparent, right? If you're just completely agnostic to everything and you're pragmatic about everything, and you don't care emotionally about anyone, you don't get emotionally tied up with these guys thinking they're going to change your life, then just find a way to bet on it. Their policies. I wish there was just some casino or some like OLG lottery ticket where I can just bet on who's going to win. I'm sure there's somebody that's going to set that up. If I can find it, if you guys can find it, let me know. I'll bet on it, because sometimes you can just tell what the economy's thinking. Disney somehow managed to lose money on Star Wars, trash company. Yeah, but that's the cyclicality, right? And Disney will probably come back. They'll probably make another banger. It's an inevitability because they're pouring so much money into it, but it's at what cost, right? It's not like a moated business like Hershey. Hershey's is like a clear winner. Like when that thing tanks, yeah, I mean, they could have to pay out for a lawsuit. It's really sad that this shit happens. It's like when people had allergic reactions to nuts, but you got to evolve to it, right? And when you can get a name brand company trading 20% off its all-time high, usually it's a good, especially when the metrics are doing nothing but going up. I always talk about that kind of inversion where revenues, the stock goes down, but revenues and profit keep going up. That inversion, so long as the news isn't detrimental to the company, which I don't think that is to Disney. I mean, Disney, Hershey, I keep getting those mixed up. There's some good opportunity. They haven't paid a dividend forever. I think it was a couple of years ago they cut. What do you think about Etsy? I don't really look into I know Etsy's pretty good. I know a lot of people love it, but what's the stock trading at right now? Let's take a look at Etsy real quick. I don't play like those are like the Jeremy stocks. I think I don't really like getting into I don't like consumer outside of Costco. I really just don't like consumer companies like where you have to go to a mall or a brick and mortar store or online even per se, because like I've looked at so many different, when we're buying furniture, how many different companies I've looked at. I mean, it's crazy. Like, I don't understand it. I don't like Targets. I don't like, what used to be Zellers. I like food, like Loblaws. I can get into that. Anything that has a better moat that isn't trend, right? This comes back to Disney. Like, I feel like they have to have trending products. The user base has to really love it and have to be excited to sell on it, like they are on Amazon. Amazon basically owns like crazy moated products now, and it's become like the household name. Lots of people have hated JT for a long time, yet got reelected twice. Don't underestimate how dumb the average voter is. Yeah, but the average voter is listening. Like, you just got to listen to the people, right? Sorry, I'm kind of going back to the newer comments. Let's back roll, but we don't have to stay in the political rhetoric. I just feel like people are over Trudeau at this point, unfortunately. When you see Little Pump doing the AI TikToks, times are bad for the rich. Print so much money it becomes worthless. Yeah, sorry, I scrolled way too down here. Enbridge is smushed this week. Enbridge is looking like it's going to bankruptcy. You know how many times I've heard this over the years? Enbridge is probably they're highly dilutive. Enbridge is a company that I feel like I understand a lot better, but their business is too moated and encrusted in like human society at this point that this company can't go anywhere. This company is responsible for like heating millions of people's homes, like literally connected to their door. Like if you walk around your city, like even in Markham where we used to hang out on Unionville Main Street, walk behind those like little shops and look at the gas meters. You'll see Enbridge on every single one of them. Like, I mean, the reason their stock's down is because they just did a massive acquisition that's going to make them the largest natural gas, like basically powerhouse in North America, like, which is a huge moat for them at this point. Like that was strategically, it looked like a good idea, but if we go into their balance sheet, the big problem here is you're getting it through dilution. So the question is, let's take a look on the return on invested capital, because where is the total shareholder equity? Stockholders, is this the shares? Where's my shares outstanding? Why can't I find this real quick? Am I just blind? Accumulated others, stockholder, common stock. Yeah, 71. What is that? Probably in the billions. Versus, oh no, it actually looks like they've taken stock off last year, but they clearly diluted, I mean, to do this acquisition, but actually didn't look like they were diluting as hard as I thought they were. Interesting. Anyways, let's take a look here because I just want to point out the return on invested capital. That's usually a pretty good thing to take a look at. Yeah, the return on equity and assets not that good. Where's my returns here? Yeah, I'll have to break this one down a little bit more in depth. Don't trust the payout ratio. That's dumb. Infrastructure companies do massive write-downs. I always state that. Stupid thing to look at. I mean, it's massively held by institutions, fairly stable in that aspect. It's like 2% shorted right now, which is funny. I think everyone hates on Enbridge because when you look at it at just from like a fundamental basis, people are like, the dividends not going to be able to recover. The company's going bankrupt. You know, they're paying out huge amounts in debt, blah, 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 blah. But it's an infrastructure company. I mean, all infrastructure companies are dealing with that right now. But you're talking about a company that, you know, basically has minus 179 billion, minusing 116 billion. I mean, could you $180 billion in assets? You know how crazy that is? You minus the liabilities out there, what, like 160 deep, or sorry, not 60 billion deep. What's their market cap right now versus those liabilities? Yeah, 92 billion. I mean, it's really not trading too high off of the underlying asset value. I don't know. I don't love Enbridge. I don't hate it. It's just one of those ones people like to hate on, but I don't think it's just. I don't think Enbridge will go anywhere. Even if they like declare bankruptcy, somebody has to subsidize all that stuff. It's too big to fail at this point, I think is a good way of putting it. Like the pipelines are too strategic when it comes to shipping oil and gas across the planet. It's going to be a huge one for natural gas. CNQ, like I don't play these as often. CNQ has been crushing it. I mean, CNQ has been a big outlier, I think, over the last, year? Take a quick look because I know these energy plays for you guys. Love it in Canada, right? CNQ is what? It's up 24% this year. It's been crushing it ever since God knows what. I haven't looked into it. I know some guys in our chat group love it. I'll have to take a deeper dive into it one of these days. But anyways, let's get into a few more comments here, guys. And I'm gonna kick out here. I appreciate y'all coming by. TC Energy. What about the pipelines? Yeah, I mean pipelines are good. I mean, by a lot of because oil. The fact is oil might not always be used in gas. It might go down in use, but those pipelines are going to always have use to some extent. I mean, why is Buffett buying oil companies, right? So wouldn't it make sense to buy the utilities because then you're a little bit cushioned against what oil really does, especially how Enbridge is so diversified in a lot of different things. They do like 6% in the market. Once again, overshot. Yeah, that's the thing, right? So with that big purchase, man, I think it was like $40 billion or something insane. What about RioCan and REITs this past week? Huge deals in a lot of the REITs. I think RioCan came back, didn't it? A lot of people were pretty excited about the REITs because they've been coming back. This is the US ticker. I hate that sometimes it doesn't show me the Canadian ticker. And I just have to open it up in friggin' Yahoo. Stupid Google. Over the last month, what are we, 1913? Yeah, it looks like we're kind of stuck in this trend line, right? It ran up a little bit over the last month, keeps coming down. REITs are going to be impacted by the higher interest rates, but these are what I call your like recovery plays because eventually they're going to cut rates. And as soon as they cut rates, as soon as people stop hoarding cash to record levels, they're going to start putting it back in the market. And that's where I'm still betting that like the lower half of the market that's been so suppressed is going to come back and probably take the market to new all-time highs because inevitably that's what's going to happen because values are starting. Everyone sees the value now. But when you can get 5.5% on high interest savings, people don't seem to care, especially when there's no risk in it, right? I mean, you don't even have to buy a bond or a GIC. You don't have to lock any money in. Just high interest savings accounts, baby. They're crazy. But nonetheless, this has been a bit of a fun live stream. We got one or two more comments I'd like to read. Hey, Kyle, question statement. But have you found lately that the YouTube algorithm for views, CPM, have been better than ever? People think YouTube is harder side hustle than ever, but I disagree. So I was going to do a dedicated video to this, which I think is funny. I really want to do a video if it's still worth doing YouTube right now. And I've come up with like a strategy. I've talked to somebody about it that wants to do it. And I think it's like the only way to do it today. Well, there's I can't spiel the whole thing. I'm just telling you that like in the last year, I think I've made up to this point about 60 or 70 grand from this YouTube channel alone. Plus I do my business that I'm hired in, like as a salary employee. I basically work in the YouTube space. So I'm like, my job is 100% social media from both aspects. And between those two incomes, I'm basically making 6 figures from basically just social media and YouTube. But I think there's a way that you can fast track the YouTube side of it and become profitable quicker. It's a little bit more costly up front, and you're going to have to pay for it because there's just no way to make like banger content and have it grow dramatically quick. And a lot of that has to do with paying influencers. Like all the influencers in my space, you can pay them money and they'll let you come on. And I just did an influencer one with a buddy that just for free, a guy that reached out to me, and it bled so many new subscribers to my channel. But there's just a lot of things you can do these days. And I'm doing it with a company. I don't want to get into it because obviously I don't want this to backdate into my life and somebody hate me and start attacking my business or something. But like we are literally implementing like, sponsor-based channels right now and fast tracking the growth. And what we've been able to do in like a month and a half is kind of astounding. And what that can represent, because we basically just want to get it to a place of profitability. And we're trying to take the cleanest path with good content there, but we know how to fast track it. So yeah, I think social media, if I had to start over, I wouldn't make YouTube the priority as much as I'd make TikToks, or I'd make like Facebook's dead at this point. YouTube and Facebook are pay to play. Like you really need to find audiences somewhere and have a brand and stick to some kind of like niche content and not be too broad and all over the place. Cause it's hard to be like a general, like vlogger these days. It's almost impossible. But when you go on TikTok, like I post TikTok, some of them get like 50,000 views for no reason. I know TikTokers right now in the stock market space that are charging $2,500 US for a TikTok, and they only started doing TikTok like a year ago, and they're getting like crazy sponsor deals. TikTok is just a place to make free money. Anywhere you can get views for free, that's where the value's at. And of course you can bleed it over to a YouTube channel, but I think everyone should do social media. At the end of the day, it's like Gary Vee, right? Like I was telling my buddy at that computer store, it's like, if you want a brick and mortar store, you are reliant on the advertising of basically whatever's on the front of that door and people walking in. Maybe you got a Facebook page, but it's all foot traffic, right? You need to find a way to reach those people in their home from that shop and sell them things from that shop and increase the exposure, right? To like an exponential level. There's no way around it anymore. Like you have to be a social media influencer. There's just no way to get around it anymore. Brick and mortar is going to die. Everyone's going to work from home and robots are going to do the rest. I promise you that. Give it 40 years. It's going to be crazy, boys. We're going to live in a whole new realm of crazy shit. I don't know if I'm excited for it. I'm excited to get to an early kind of semi-retirement state so I don't have to worry about job replacement because we're already using AI. The amount of ways AI has popped up in my own business is kind of mind-boggling. So I'm sure my job will be replaced at some point. It's an inevitability. I promise you. You go on, you can literally make a YouTube channel. You pay for this app and it gives you one of these robotic AI faces they mold. You can even mold your own into an AI thing. You write a script and it looks like it's a person saying it. And it's so realistic. It's so crazy. You don't need what you used to need. But on that note, folks, I always appreciate you stopping in. I got a lot of videos I'll break down next week on some of these relations, maybe just do a full YouTube video on my income and how we do it. But other than that, I do appreciate you taking the time this Saturday. So stay cool, stay awesome, folks. And remember, life is short. Live it up, baby.